Welcome in. Today, we just got the ADP employment report, and it's going to be a wild day for the stock market. First of all, stocks right now are cheering the fact that this ADP employment report came in softer than expected. I always get nervous about this, though, because what you're really cheering is, in some respect, a recessionary potential result. The ADP report came in with a survey of 150,000 jobs. We got 122,000 in the actual report, with an upward revision of +5 in the prior read. Now, what we'll do is we'll go through the actual report here, and we'll see what some of the details are. The report is right here. This is the ADP report. Now, what's important to remember about the ADP report, as it comes up here, is this is the private report. So we consider this we consider this the private version of what the federal government does. So it's almost like a little bit of a fact check, we like to say, of the government's Bureau of Labor Statistics jobs reports. That jobs report, which will be more important, comes out on Friday. That job report is going to, or is expected rather, to show jobs of 175,000 as a read. And if we get another miss over there, then this might reiterate the downward trend of jobs finally rolling over, suggesting it might be time for the Federal Reserve to cut more than they initially anticipated. Right now, we have the Fed meeting pricing in for today, just a 3% chance of an interest rate cut today, with a 1.13 or 113% chance of a cut in September. Let's take a look at this. Private sector employment increased 122,000 jobs, up 4.8% year over year. Let's see here. Going into the sector, looks like we've got manufacturing at a negative, goods producing up 37,000. Professional business services minus 37,000. Now, I personally am hearing a lot of anecdotes of finance professionals losing their jobs, and this is like our world, right? So it's scary, but I'm seeing a lot of people in finance out of work. So these are going to be traders, MMA, underwriters, whatever, bankers. There's definitely a lot of consolidation that's happening, especially with the bank failures of last year. Unfortunately, you get the duplication of some roles. Tech down 18,000 right here. Also, forgive me, still a little bit under the weather, which is also very annoying because it just traps me all day, but whatever. So education and healthcare only up 22,000. Previously, we've been seeing a lot of sort of lagging introduction of jobs here. Trade, transportation, utilities nicely up, though, 61,000. And then leisure hospitality only added 24,000. So you're starting to see a real slowdown here in some of these job figures. And regionally, the weakest area seems to be the Midwest and the Northeast. The Northeast also being so responsible for a lot of those finance jobs. So, not great. Yeah, somebody here in the chat says, AI took our jobs. Ouch. Not great. So, let's take a look. And what's the... Oh, the ECI just came in at 0.9. That's actually great. The employment cost index is, that's actually potentially going to push stocks up even more right now. That's double good news here in the morning. So here are the cues for you. Actually, phenomenal move here. You've got your 8:15 release of ADP right here. You got a jump in the cues. And then you got another jump right here as we just got the ECI. That's the Employment Cost Index. Now, what's the Employment Cost Index? It is what the Federal Reserve looks for to see how our wage pressure is moving. And wage pressures here coming in lower than expected at just 0.9% in the quarter. So at an annual rate, that puts you at about 3.6%. And usually what you're looking for is you're looking for about... you're looking for about 3% to be consistent with 2% inflation. Now, I know that can sometimes get a little tricky, but basically, the reason you want that, think about the consumer essentially being responsible for about 70-ish% of the economy. And if you take about 3% and multiply it by about 72%, you get roughly 2%. So it's very interesting how that aligns. I'm not sure if it intentionally aligns that way. But the Federal Reserve's made it clear their goal is to have wages going up at about 3%, slightly above the rate of inflation. And ECI coming in at an annualized rate right now of 3.6%. So let's see here. Another set of good news that'll be bullish. And then it's really going to come down to Powell today. Because Powell, in my opinion, he adds fuel to the fire of what we had yesterday and these good reports. I think the stock market just keeps moving up on this. There is a chance you get a little bit of a disappointment dip with Powell, but so far this is all pretty good news. And we had a whole setup of potential bad that could have happened this week. And frankly, it's all coming in better than expected so far. Okay, so let's keep going with the ADP report here. Now, also do keep in mind, there's some recessionary aspect here, right? So when you get a weaker report, do consider that weaker jobs report / ADP report could mean closer to recession. So what happens if Powell doesn't tee up a September cut today? I think markets are likely to maintain positivity, but there's a risk if Powell is too rough today, the market actually falls and prices recession. It's less likely. So I would say this is probably 70% likely. I'd say this is probably 30% likely. Because, again, markets expect Powell to be dovish, and even if he's not, the data and earnings should support green in markets. Let's align this correctly here. But there is this risk that, in my opinion, if Powell is too rough today, the market actually falls and prices recession until hopefully earnings bail the market out again, which will have more earnings today. So we'll see. But again, yesterday's earnings, AMD, Microsoft were fantastic. And then, of course, the numbers we're getting this morning are quite excellent as well. So great results. Okay, so let's see what we got here. These are wage gains. You can see wage gains for job stayers are sitting at about 4.8%. Job changers are sitting at 7.2%. There was a period at the beginning of the year where this was actually moving up, which wasn't great. And then now you can see it's moved down again a little bit. Biggest wage gains seem to be coming in construction, and lowest wage gains seem to be in professional and business services, with the largest wage gains going to medium firms, 50 to 249 employees. And as far as hiring, look at this. Small establishments were roughly negative 7,000 over here. Medium were the ones that hired the most, and the large establishments also continued some hiring. We saw some of that at Google as well when they reported. So very interesting. This is the ADP report here. I'd say overall this is something that contributes to a happy Powell, or I should say a dovish Powell, right? So ADP report again, expectation 150K jobs. Actual was 122K with plus 5K revision, so below expectations. ECI comes in at 0.9% versus 1% for the quarter, or 3.6% annualized. So I want to zoom out on that on a chart basis. Let me see. So this ECI report, latest report, this is like what we had in Q4. This is only the second time we've had an under 0.9% read since 21. Wow, that's pretty good. Only the second time ECI has been under 1% since 2021. So really sort of quells this, and ADP quell wage price spiral fears, which had mostly already been killed by Powell anyway. He's already, crushed the whole, there's a risk of a wage price spiral. He crushed that probably about 9 months ago. So now we're in a place where we've got our caddy of ECI and ADP out of the way. Other caddies this morning, obviously, you know, at 11 California time, we will have JPAL's rate decision, and then the press conference 30 minutes later, which obviously we'll be covering in depth. But, excuse me, let's get into some of the earnings that we have today. So let's see. This morning, we've had a few, so we will cover them. All right, let's see what we got here. So first one I want to hit. Let's see what we got here. Okay, we got Boeing, and let's see here. Okie dokie. Okay, so Boeing. Boeing revenue comes in at 16.9 versus the 17.46 expected. Negative adjusted free cash flow of 4.33 billion. That's roughly in line with expectations. Let's see here. Boeing shares gained 3.2% after CEO appointment and results. Oh, okay. So what else? We've got debt was issued. Debt was up to 58 billion, up from 47.9 at the beginning of the quarter. Okay. Calhoun to serve as special advisor, blah, blah, blah. Okay, so Boeing actually popped a little bit. Let's see here. You know, every time I stream on Facebook, you instantly get the scammers. I received your notification and got the Bitcoin you sent me. Thank you, Kevin. These people are such a scam. You know, I used to not stream on Facebook because the amount of spam that you'd get on there is just insane. But yeah, I'll just have to keep giving warnings. No, I don't send anyone Bitcoin. It's shocking. Okay, let me listen in briefly right here. Right here.
So the fact that they followed through here today should come as a relief to the Treasury market, which in recent months had been overwhelmed by some unexpected supply. To break down the auction, Treasury says they'll be refunding around $111 billion and raising $14 billion in new cash. The breakdown in tenors will also hold steady from previous quarters. So that's a $58 billion auction for the 3-year, $42 billion for the 10-year, and $25 billion for the 30-year. Now, Treasury says they should again be able to hold auction sizes steady moving forward for at least the next several quarters, they say. So much more stability here all around than we were seeing late last year. Andrew, back over to you guys.
433.
Okay, thank you for that. Bex, what were you just saying about this?
Well, if you're looking at the 10-year yield, we didn't show that when ADP was reported. You'll see right now 4.11, so it's even lower for the 10-year, 2-year too, 4.33. All of this gearing up for what we hear from the Fed later today too.
Meantime, we are here on day 5 now of the Paris Olympics, all in full swing. And joining us right now is a very important voice at the Games, the U.S. Olympic and Paralympic Foundation President Christine Walsh is here. She joins us to talk about the work of the foundation and much, much more. It's great to see you.
Thank you.
And I don't know if everybody realizes, but Team USA is not funded by the government. This is so very different than a lot of other countries.
That's right.
It's funded effectively by fans and sponsors.
That's exactly right.
What's the total budget of Team USA?
There we go. I just figured out how to disable comments on Facebook. Goodbye, scammers. Okay, good. So then we've got, so Boeing, good. I mean, Boeing's just been a tough story. It's been a stock that's gone through some poop, quite a lot. So more debt. You've got a new CEO. Calhoun's getting the boot. So they're still trying to boost the 737 MAX production. I'm just shocked they don't rename this plane. It's gotten such a bad rap. People don't even want to be on it when they're flying on it. It's crazy. I talked to a stewardess once. She's like, yeah, we have to turn the little pamphlets around so it doesn't stare in people's faces that they're on a 737 MAX. It's crazy. Norwegian Cruise Lines. You've got a beat on EPS, beat on cruise days, tiny miss on revenue. Passengers carried missed, but they actually increased guidance. So they're making more money with a fewer than expected people, it looks like. So let's take a look at, excuse me, NCLH. There we go. Norwegian Cruise Line's up about 4.5%. Wingstop's up about 4%. You've got, what happened with Wingstop? Wingstop's EPS beat. I'm shocked in the restaurant industry. I hate this company so much. Oh well. Total domestic stores comp growth 28% versus the 19% expected. Wow, they came in low with their estimates. So Wing beat, Norwegian beat, Boeing has CEO replacement, so you have good news there. Let's go to MasterCard. Okay. MasterCard. Okay, I'm gonna write these things down too. Boeing, up on CEO replacement, 10 bill, roughly 10 bill more debt than expected. More debt than expected, and still expects to continue 737 production this year. I mean, that's the big anchor right now. And we know that doesn't define the whole company, but that's everything people think about when it comes to that company. MasterCard. MasterCard net revenue beats. Net rev beat. Adjusted EPS beat. Purchase volumes came in a little lower than expected. Cross-border volumes were a little higher. Let's see how MasterCard did. MasterCard comes in with a beat. This is, and then we mentioned Norwegian Cruise Lines, Norwegian Cruise Lines, beat on rev and adjusted EPS with fewer passengers than expected, but greater occupancy percentage. Interesting. Okay. Then we have Kraft Heinz. Let's go grab that. Okay, let's see how they did. Okay, so Kraft. Kraft comes in with a beat on fiscal year guide, maintains dividend, does lower fiscal year outlook for net sales to -2 to 0. Organic revenue did come in at -0.24, so worse sales, or missed on sales, -2.4% versus -1.1% expected. Again, beat though on adjusted EPS, and they maintained their guide. So I wonder how they're moving on that. Kraft. They're also up. All up so far, by the way. And then you've got, take a peek here. Then you have, where is the rest of our earnings set? Let's see here. Who else? Boeing, Norwegian, MasterCard, Wingstop, okay, Kraft, Generac. We can look for them. Generac, Fiserv, Marriott. Okay, let's take a peek. Generac. Wingstop has the chicken AI. Yeah, no kidding. Okay. Okay, alright. So, what do we have here? We have Generac. Also beats. I wonder, was it on battery sales, just like what we saw at Tesla? They have, well, net sales missed, but barely. Minor miss. Minor revenue miss. 998 mil versus 999.9 mil expected. That's almost a bill. So close. Q2 adjusted EPS beat at 135 versus 121, and somebody announced some strategic investment into them, and they think sales are going to grow for the rest of the fiscal year at about a 6% midpoint. Fiscal year net sales. All right, it's pretty good. Oh, and margin. Adjusted EBITDA margin. EBITDA margin to be 17.5% at midpoint versus 17% expected. Also good. I mean, that's all across the board good right now. Oh, very good. Yeah, look at that. 4% as well on Generac. Okay. Generac, Norwegian. Okay. What about Marriott? A lot of earnings to cover today. Marriott. Let's see. Marriott revenue. Revenue missed. Cuts outlook with weakness in China and North America. Ah, that's our first miss. Down about 4%. Ooh, McDonald's CEO on the consumer. I kind of want to hear this, and then I'll come back to Marriott.
We've been talking about McDonald's a lot since we've been in Paris, both on air and off, because you're right across the street from our hotel, too. We've been by it several times. Before we get into really what's happening here in Paris, you guys are just out with your earnings this week, and you did give a really good feel for what's going on around the globe. Maybe we can talk a little bit about that. There have been big issues and big questions about what's happening with the consumer everywhere in the globe. You see luxury spending that's coming down, but also at the other end of the spectrum, some people kind of pulling back and not spending as much either. Where do you really see what's happening? What would you say about the state of the consumer?
Yeah, we started warning on it really last year, and what we were seeing was the low-income consumer, that consumer was being much more price discriminating, and as this year has unfolded, it's deepened and it's broadened. So you're seeing, it started in the U.S., we're seeing it in more markets. Almost every one of our major markets, you're seeing the category slow down as a consequence of that. I think you've seen a lot of other consumer companies also caution on what's happening with the consumer right now. So I think there is sort of this broad-based slowdown. It probably is more pronounced with lower-income consumers, but I think even on upper income, you're seeing, for example, things like frequency to restaurants decreasing.
You rolled out this value menu, this $5 value menu this summer, and it's been pretty successful. In fact, your stock was up over the last couple of sessions, even though earnings were below expectations, I think because you talked about extending that. What are you doing with that? And how long will you extend it? Sure.
Well, I would consider the $5 menu sort of chapter one of a multi-chapter value playbook that we're going to be writing. And that is continued through the end of August. We're working with the franchisees in the U.S. to get a broader value construct in place. If you think about what's happened for us and you go back to where we were in 2019, our costs in the U.S. have gone up 40% in our restaurants. And
since
2019. Costs are up 40%.
Wow. And prices are up.
Pricing is up correspondingly. Okay. And so what you now have is you have to have a value reset where, what we had before was a $1, $1, 2, 3 menu. Well, the $1, 1, 2, 3 menu is a little less compelling when your prices have had to go up 40%. And so what we're working on right now with the franchisees is what's next. I'd consider the $5 meal a bridge value program, and then what we'll be doing is putting in place a more permanent value program, much like we had previously.
Yeah, I mean, that's a really tough thing to tackle, especially when you look at California, where minimum wage was up like 25% earlier this year, starting in, was it March?
Yeah.
How do you combat that? I mean, how do you offer value when you've got prices up like that?
Yeah, well, I think what happened in California, I hope, is a unique situation. It was a piece of, very lopsided legislation that was targeting one industry, our industry, and actually targeting only one segment of the industry, which was large companies. Smaller restaurants were exempted from all of that. And so you did see there was a big move on minimum wage. We've had to do everything in the playbook, basically, in California, from finding productivity opportunities in the restaurants, looking at staffing, looking at hours, and then, yes, you do have to look at pricing. So when you're a franchisee, these businesses are all locally owned. I mean, I think that's one of the things that often gets forgotten. these are locally owned businesses, and pricing had to be part of the equation in California. And you're seeing in California, the business there is falling off to a greater degree than what you're seeing in other markets around the U.S.
You've had another headwind you've been battling, though, and that's a boycott, a Muslim boycott in lots of places because of what an Israeli franchisee did after October 7th. Where do things stand with that? It's been an issue here in France, you were just saying this week on the earnings call.
Well, I wouldn't characterize it as something that was related to an act of a single franchisee. I think you're seeing broadly Western brands have been a target for some of what's happened after the outbreak of the war in the Middle East. This is a terrible situation that's going on over there, and it is impacting our business in some markets. Again, I'd say the thing to remember is in these markets where we're having some of those boycotts, these are businesses that are owned by local franchisees. We typically are the largest employer in that market, and most of our supply chain is sourced from in that market. So here in France, for example, 3/4 of our supply chain is sourced from within the country. We have 28,000 farmers in France who supply our restaurants. So I think we, like a lot of Western brands, are sort of working our way through this. But the important point is, McDonald's is not taking a side on this. And I think, for us, we're about supporting communities, and that's what we're going to continue to do.
Is there another restaurant chain you look at you think that's done it better? By the way, Starbucks has been struggling with similar issues in certain ways.
I honestly, I don't spend a lot of time sort of comparing, what others are doing. I think for us, it's always going back to kind of the foundation for us, which is to go back into the community and to lean on our local franchisees, to lean on those local connections, and make sure that we're telling our story. Because again, I think sometimes there's this idea that McDonald's is this big global behemoth, but at the end of the day, we're really a local business run by local franchisees. And I think once people understand that, they have a different view on some of these issues.
Very quickly, you are no longer a sponsor of the Olympics. You were up until about 2018. You're here anyway. What's the reason to sponsor to not sponsor? It's pretty expensive, I guess.
When you're McDonald's, we don't have an awareness problem. So everybody knows McDonald's. And these big properties like the Olympics are great at driving awareness, but our business is about driving frequency. It's about how do we get people to come into the restaurant one more time. And so a property like the Olympics is more of a reach, is more of an awareness driving mechanism. It doesn't work as well for us on frequency, and so it's for us just a business decision.
Can I ask you a question? So we had Quincy on from Coca-Cola, who's your partner.
Yeah.
They've been with the Olympics forever. They don't have an awareness problem either in that regard.
Yeah.
But I think he would tell you this is one of the great branding moments for a company like that in the world, and there's a feel-good thing that happens as a result of it. Would you actually tell other companies that are sponsoring the Olympics that they're in your awareness camp, that this is actually not a valuable franchise?
Well, you would.
I ask it seriously because clearly you've had a lesson in this. You've done it.
Yep.
I don't know if you think it's had any impact on your business at all.
So we start with, we are a sponsor of the World Cup. So we are one of 3 global sponsors for the World Cup.
So why do you do that?
Well, because I think to your exact point, that is a global opportunity to come together. These teams are very.
I don't know. He kind of caught him there. It's like, oh, okay, you'll sponsor the World Cup. Oh, that's a global opportunity. Oh, but not the Olympics. Oh, we don't have an awareness problem. What?
It gets our franchisees excited about. We can get our customers excited about.
All right, this is boring. So anyway, yeah, look, market's very, very green right now. In fact, if you look at the sheet, you don't have a full page of red, which means you're going to get more red in the day. So I do think that's worth remembering is that usually when we start this green, we get some red. What's going to be interesting today is it's all going to come down to Fed price intraday trading is going to come down to the Fed. The rest of the week is just going to be relying on earnings. I don't think for the rest of this week the Fed really matters. However, intraday, usually what we'll see is a nervousness around the Fed meeting. Sometimes we'll see a top off about an hour before the meeting. So this is what I've seen previously. I'm going to write this down. Fed, we'll call it Fed trading. Okay, here we go. Fed trading. Okay, not uncommon to see a sell-off right, or I'd say an hour before the FOMC. So that would be an 11 a.m. FOMC meeting, so that'd be 10. And then also not uncommon in the last few meetings to see a sell-off after Powell speaks. However, that would likely be short-lived. If earnings keep killing it. If earnings keep doing well, so far they're doing well. So much less of a concern after AMD and Microsoft going into some of these earnings. Looking at yields on the 10-year right now, you're at about down about 2.9 basis points. On oil, you're almost at 81 on Brent. So oil's moving up because of the takeout there of the leader of Hamas. Likely due to... Okay, so... Yeah, almost at 82 on Brent. That's a pretty big jump. I mean, just a few days ago, we were around 76. Let me see where we were. Oil, Brent... Yeah, let's see here. It was just on the 29th. Oh, okay, we were at about 79. Got it. Okay. Kind of been trending down, actually, from the mid-80s anyway, so... Brent, up just over 2%. Okay, then where's our 2-year right now? We could get the inversion here. 2-year is 4.33. And the 10-year is 4.11. So we're still 23 basis points inverted. Yields. 23 BP inverted. Though 10-year is declining with the 2-year. So yields are trending down. 10-year now at 4.11. All right, let's see here. Yep. ehack.com. Thanks, Rob. California has its issues. I'm a bit hesitant. Yeah. I agree. Well, let's see. What else we got here? Let's see here. The thing about fast food restaurants is this. 2-hour minimum wage equals the cost of a meal. This has been forever. 2-hour minimum wage cost... Okay. I feel like the market is going to rally after JP. I think if we keep getting earnings like this... Oh gosh, yeah, I think the market rallies. The earnings have been great. You know, you gotta give the data its credit. Earnings have been fantastic. There is no inflation problem anymore at this point. I don't see a second wave of inflation. So the data's good. Consumer weakening. Let's see here. Vinny himself, nah, man, I just eat fruit and get my vitamin C in my fruit. Okay, let's see here. Multi-chapter value menu. Yeah, I thought that was kind of interesting, too. This idea of, oh, don't worry, we're going to have more price cuts coming. I mean, it really goes to show you that inflation's just going to continue to fade away. You really, I think... are killing those fears over and over and over again that there's going to be a second wave of inflation. So pretty good. Okay, what else? Let's go with... Oh, do they have the CEO of Microsoft over here? Let's see.
Place we look at, that then...
Oh, they're just referencing the call. All right, let's briefly look at it.
Basically, that's the demand signal. Because you got to remember, even in the capital spend, there is land and there is...
I remember, I quoted exactly this line.
...is the kit. That only will be bought for inferencing and everything else if there is demand signal. Right? So that's, I think, the key way to think about capital cycle.
Jim, you excoriated investors who sold last night too soon.
Yeah, well, they're a bunch of clowns. You have to wait for Amy Hood. Amy Hood is the CFO. She's been an unbelievable CFO. Why would you sell this thing down 30 without listening to the person who actually is the keeper of the numbers? It would not surprise me if the stock actually finished up. because frankly, even the so-called Azure slowdown is chimerical. Amy Hood makes that very clear that you just had a couple of European geographies. You really shouldn't let that be the case. Look, what's the real line about this one? And we'll talk to Lisa Su about it. You know, I'm going to use an analogy because I'm sick of talking about tech and people hating me and not knowing what I'm talking about. Okay, there's this thing called depletions when it comes to liquor. What that is that everyone trials a liquor. They trial one.
Oh, okay. Now he's gonna pitch liquor again. He was doing this yesterday too.
Oh, yeah, order AI, and who knows if it does anything for you? Satya, who completely always buries the lead because he's completely calm, said that, look, the depletions are good, so to speak. People are reordering, which is the idea that if it were not any good and no ROI, they wouldn't reorder. Now, David, when I listened to this call, the big issue was there's not enough compute power right now. Now, that means that it's not, if you go back to the Google call, which I think was very ill-advised, you did not have anyone saying, we get a good demand. What you heard was, well, we better build it because we're going to get beat by everybody else. Well, they're getting their ass kicked by Microsoft. This must be the case. Because, man, these guys cannot meet demand. They cannot meet demand.
Yeah.
And I think that was the tail of the tape. But, you know, sell it before Amy Hood. How many times do we have to have people who don't know what they're doing running big money?
Right. Well, all right. So we'll keep an eye on what it actually does when it opens. That said, there did seem to be this disappointment. I don't know if you want to call it that, concern that somehow the growth rate at Azure at 30% was not as high as many analysts had anticipated. And therefore, that is somehow indicative of, you couldn't call it a slowdown, but a concern.
Well, we know Hugging Face. How about Two-Face? The analysts were all Two-Face. They were praising and congratulating. Look, can we listen to Amy Hood, who knows more than anybody? How about we play Amy Hood?
To meet the growing demand signal for our AI and cloud products, we will scale our infrastructure investments with FY25 capital expenditures expected to be higher than FY24. We are constrained on AI capacity, and you do see us investing quite a bit, as we've talked about, in builds, so that we can get back in a more balanced place.
Amy watches the show, and she's quick to point out when you don't get it right. She's a nice person, don't get me wrong. But when you listen to what she was saying, she's saying the orders are just so huge. We're not really sure what to do. We're trying to meet demand. It can happen. And we're afraid actually probably losing demand to other people if we can't make enough. And, you know, the takeaway there is that they missed Azure by a point. Who makes this stuff up? Go back over the alphabet and you're going to say, did YouTube really miss? These are fatuous reasons to sell. Now, that doesn't mean that things didn't get too inflated at 38 times earnings. But do you know that NVIDIA is now selling at 23 times next year? And
well, that's after yesterday's.
It lost $800 billion. It lost $800 billion market cap.
I want to take a look at that. Let's do a quick fact check on that. Might actually be right. Let's take a look at it, though. That's a good idea. Let's take a look at some of this pricing. So, NVIDIA... All right, so NVIDIA came in at, let's see, right now we're 111 divided by 273. It's trading for 40.66. Okay, so I don't know what he's talking about. But okay, it's trading for 40.66. And then if I divide that by the growth rate here, growth we're looking at is 3960, 1393, 1396, 1627 divided by 4 years. 8376 divided by 4 puts me at about 20.94 growth. So call it 21. 46.6 divided by 21% growth. Puts me at a 1.93 peg. It's actually pretty good. NVIDIA 1.93 peg right now. Pretty good. I'll give it to it. That's pretty good. Let's go MSFT. Okay. So Microsoft is sitting at 418 divided by 1326. Microsoft's sitting at 30.5. And if I get a peg here, $16.61, $17.09, $12.46, $15.61, $61.77 divided by 4, $15.44. $2.04 peg on Microsoft. Also, honestly, pretty good. That's pretty good. Now let's go with... try Tesla quickly. I think Tesla's not that great right now. Tesla's actually a little rich. So if I go... what's Tesla doing right now? Tesla right now is 2245 divided by 23. Yeah, I'm still trading at 97.6 times. It's crazy. Yeah, Tesla stock went too far too fast. But we do have about 32% growth. 32. That's a 3 peg on Tesla. That's crazy. And then if you look at one of my faves right now, you look at a Ubiquity. They're at 177 divided by 602. 29.4. And then the growth they're expecting... they don't have a lot of analysts either. But I can't I can't imagine their growth being this slow. 44.85 next year, followed by 3% and 3%. That seems odd. I think. But anyway, let's just go with that for what it is. 6.02. 29.4 divided by about an average of 15.5. That puts you about 1.89. Did I do that right? Oh no, it's even less. 16.8. Hold on, 16.8. Let's actually do my math right here. 29. 16.8. 1.75 on Ubiquity. Wow. That's actually pretty good. That's pretty good. Okay. So what about AMDs? Look at AMD quickly. Okay. AM Dizzle. They are at, call it 150 divided by 344. That puts me at a 43.6. And then if I go grab the growth rate for the next 4 years to get my forward peg, 141.7. It's pretty good. 35.4. Oh my gosh. Oh, they're trading for a 1.23 peg. It's a steal. That's actually pretty good too. And now that you got confirmation on these earnings, it's pretty juiced. Okay, so then you have what? There's another one to look at. Let's see here. Amazon comes up this week. Apple comes up this week. Enphase. Dell. Goog. Here's Ubiquity. They don't really move in pre-market though. Okay, so obviously we'll see what happens with JPOW today. You have less than a page of red, so it's very likely we're going to get some more red here. But that doesn't necessarily mean the entire market moves red. It just means some more stocks go red. All right. Somebody says, do Meta. Okay, let's see. Let's do Meta. Meta. Yeah, we just did AMD. Okay, let's try Meta. As far as SQQs, I would say the nice thing about SQQs, the ones I've been buying, they're December options. So I'm not like in this crazy rush to not have my December SQQs, because you just never know. So, and there's always going to be another red day, but let's see here. Meta. So, Meta. If I go, what's Meta right now? What are they trading for? Meta right now is trading for 468. And I'm going to divide that by the 2059. That gives me 22.73 on a PE ratio. And then their growth is, over the next 4 years, their growth is expected to be 50.74 divided by 4, 12.7. Puts me at about a 1.79 on Meta. Honestly, you've had a good little correction here. You've had some good, I mean, that makes sense. You've been making money on, people have been making money on shorts. And so, you know, it makes you wonder now, are the earnings the catalyst for turning it around? It's going to depend on JPOW today for intraday trading. And then a lot will depend on earnings for the rest of the week. And then whatever JPOW said will fade into the distance. And like I said, it'll probably just add fuel to the green. Let's listen in over here.
NVIDIA, they got to have it, which of course you're taking share when it comes to some parts. Is it not true that the real issue is can you meet compute demand?
It is absolutely true that compute is really the foundation for what unlocks all of this, AI capability. It is true that the supply chain is very tight right now, and frankly, people need more compute. We're in a very, very strong position in the sense that we're continuing to ramp up our MI300, which is our AI compute chip. But we also see actually, broader demand trends that say even in traditional compute that had taken, a little bit of a slower start for the year has actually now seen some very positive signals. So we see that on the traditional data center CPU side as well. So overall, when I talk to CEOs and CIOs across the enterprise, I think this is an opportunity to invest. It's an opportunity to invest to really capture, all of the capability of, AI, and it's also an opportunity to refresh, data centers that have been aging for some time. So these are some of the trends that we're excited about going into the second half.
So, Lisa, maybe it's because you're a plain-spoken person like my friend David Faber, both from Queens, I might add. Can you please explain to people, even though AI is not necessarily curing cancer or putting a man on Jupiter right now, it is integral to many of the organizations that you deal with and talk to every day?
Absolutely. First of all, it's great to see, David and Carl as well. When I look at AI, I really look at AI as trying to really help every enterprise, every company, every sector really become more productive. And we see it in many different ways, from simple things. You'll hear people talk about call centers and customer response, and I call those, very low-hanging fruit, to much more complex things like, designing better chips. That's something that, we do and our semiconductor peers do, or designing better factories, or actually even helping discover the next big drug discoveries and the healthcare things that you mentioned. I do think this is a long-term arc, so people are always expecting things that happen overnight. This won't happen overnight, but the time to invest is now, so that we see the payoff in the 1, 2, 3, 4, 5-year time frame, and that's what companies are doing because we see the huge potential for using AI in all of our businesses.
Lisa, it is David. Back to the M1300 and the guide to $4.5 billion that Jim pointed out that I think is being embraced by investors. I've had a couple this morning actually ask why it isn't even higher. Given if you annualize the quarter and you add in a growth rate, it would seemingly get you perhaps as high as $5 billion. Are you being conservative?
Well, David, the way we look at these things is, we call it like it is today. And what we see is it was very important when we started the year to pass some important customer milestones. We have some great partnerships out there. We've talked about Microsoft being a very strong partner for us across the data center and especially in AI. We've talked about Meta. We've talked about Oracle. We've talked about a lot of the OEM partners as well that have adopted MI300, and we wanted to go through some of the key milestones. So the fact that we're sitting here at the middle of the year and calling over 4.5 billion for the full year, I think is a great place to be, thinking about just where we are in this trajectory, and we'll continue to call it like it is as we see every quarter.
This came up, something about a high bandwidth memory problem that had you losing some yield. It was not you, it was related to...
Oh yeah, she calls that noise.
...issue that's been resolved, or is there anything you can comment on or clarify?
You know, David, I would say that there's a lot of noise in the system, and I would really not pay attention to those kinds of things. These are extremely complex products. I mean, MI300 is like over 150 billion transistors. Of course, we're always working things real time, but as far as, we look at this is a very, very successful production ramp. We're very excited. We're seeing MI300 now in our customers' data centers in volume, running production traffic, giving great results, and that's what gives us the confidence for the growth trajectory in the second half of the year.
Hey, Lisa, you might have heard me and Jim talking about PCs a moment ago. Where are you right now in terms of whether or not AI-empowered PCs will drive consumer demand?
Yeah, absolutely, Carl. I'm bullish on AI PCs. I view AI PCs as really a category changer for the PC market, where we see an opportunity not just to do the things that we normally do with PCs, like gaming as well as enterprise productivity type applications, but AI will give us yet another capability with the PC that allows us to do things locally. And a lot of people actually, although we like working in the cloud, there is some latency involved with that, and the idea that you can do things on your PC with your personal data, I think, is a positive. Now, again, the way to think about this is we're very excited about AI PCs. We just launched a bunch over the weekend. It will take some time to go fully through the PC ecosystem, so I see second half as a positive for PCs, and then as we go into 2025, even more excitement around AI PCs.
All right, Lisa, let's talk share, both high end when it comes to what I would regard as being accelerated computing, and also lower end that we just talked about with PC. I see, you can tell me if I'm wrong, that there's so much business that I'm not concerned about you in NVIDIA. I think that everybody is completely overwhelmed when it comes to compute power, both you and NVIDIA. On the lower end, when Intel was at 5, when you were at 5 and Intel was at 40, you schooled me in a way that made me think that one day you'll be at 40 and Intel would be at 5. The latter hasn't happened yet. But are you taking a lot of share from Intel on the lower end, and you're taking whatever you can do to meet the demand on the high end?
Yeah, I mean, the best way to think about it, Jim, is, I think about computing as end-to-end compute. You need the most powerful stuff, in the cloud, and we certainly, love the work that we do with all of the hyperscalers. And you also need the right compute at the edge and in the client. And we have an end-to-end computing portfolio that allows us to really service all those needs. Certainly, I'm very excited about the market. We called the AI market last year at upwards of $400 billion over the next 5 years, and we see that. We see that there is just tremendous need for more compute for high-end AI, but we also see need for compute across the edge as well as the client. So these are all great opportunities. Yes, I love the large market. I also love the fact that I think we have a very competitive product portfolio, which gives us the opportunity to gain share.
We have seen a pullback in some of the hyperscalers lately in the stock market, in part because of this continuing question, Lisa, as to whether all of this enormous spend will actually get a significant return on what's being invested. And the worry is at some point you hit a wall and the spending slows. So how do you think about that from the larger perspective?
I will say, David, from the conversations that I have with our customer set and sort of the broader industry, we can see that AI is a multi-year, I would call it a super cycle, frankly. There's tremendous need for more compute. Now, how it goes on a quarter-by-quarter basis, obviously you guys are hypersensitive to a percent here or there. I wouldn't be hypersensitive in those areas. I would say, are more customers using it? Is every enterprise asking for it? Are we seeing more applications on a daily, weekly, monthly basis? The answer to that is absolutely yes. Everywhere I go, everybody wants to talk about how can we incorporate AI into our businesses faster and more efficiently, and we're all learning along the way. So that's the beauty of technology this early in the there's a lot of learning and experimentation, but definitely there will be the return on the investment on the other side of it.
Okay, so we know that Jensen Huang says the internal investment CEO of NVIDIA is almost instant. I believe that you would say that an employee may be doubly as productive with AI, and yet we still don't hear from any executive.
No, definitely not going to be doubly more productive. I do believe AI makes people more efficient in their workplace, and I do think it makes for better quality products at Microsoft and Google and otherwise. But, I agree it doesn't necessarily contribute to revenue right away.
I believe that you will see overall AI will increase productivity, will help us get more productive, and most importantly, help us get better products out faster. So
look at that. Productivity and quality. That's exactly what she said. She's right. She's 100% right.
That's just the way technology cycles are. We're investing today for the return in a couple of years, and I think that's absolutely the right thing to do. That is, that's the way we think about these investment cycles. So not quite instantaneous, but they're definitely coming, Jim.
Well, Lisa Su, thank you. And the guide up was amazing, even though, of course, David wanted double the guide up. But we're going to let you have just the guide up as you did, since it's the biggest one I've ever seen from your company. Lisa Su, CEO of AMD, thank you so much.
Thank you. Great to be here.
We'll take a quick break, take a look at the pre-market here. We'll get to so many names: MasterCard, Starbucks, Mondelez, Humana, DuPont, Pins, in a minute.
Yeah.
Power E-Trade's easy to...
Okay. I hope you got your trading fingers ready today. It is going to be entertaining, especially around JPOW. So, pretty exciting. Yeah. All right. So... see what happens. Today we've got, what do we got? Well, JPOW at 11. There's so much going on today. It's honestly crazy. Like I was just looking, and I've got the morning live, then I got the course member live, then I got the Jerome Powell live, then I got the earnings call live, and then you got like all this craziness happening in the Middle East. It's like, there's so much going on. Ismail getting the boot, getting the KO. Yeah, well, it might lead to some more tensions. Hopefully it relaxes tensions, but I don't know. I don't see there's a way that Iran doesn't react to this. So, yeah, I guess we'll see. Okay, here we go. Iran tells the United Nations it will retaliate to the assassination of Hamas leader. Okay, here you go. Iran mission to the United Nations. The response to the assassination will indeed be special operations, harder and intended to instill deep regret in the perpetrator. Okay. We will send our special forces to you. Oh no. Oh no. Yeah, oh, it's a crazy world. I just wish it could all end. Anyway, CrowdStrike faces investor class action over outage. Oof. Wonder how they're doing now. CrowdStrike. They are at... Oh, they were down 9% yesterday. Wow. Wow. They're just sort of bouncing. Oh, look at that. Yeah, they legged down again. This was the outage drop. And then here's the lawsuit drop. Woof. We did look at SoFi earnings yesterday. Looks like we're going to spend the day with Kevin. Hey, I forgot to put the banner up. It's coupon expiration day. Let's see how much money we could go make today. Yesterday was a really good trading day. Yesterday was, up 80K or whatever. I think we've been green like the last, week straight, which is fantastic. So knock on wood. We'll try to push for green again today. No guarantees, obviously. I can't guarantee you make money and can't guarantee past performance will reflect future results, obviously. Let's see. CNBC's talking about T-Mobile. It's interesting. I heard that T-Mobile is getting into landline fiber, the fiber optic networks. What I actually think is really cool about fiber is it's freaking fast. Big fan. So, big fan. Bigly fan. Hugely fan of the fiber network. I just set up another AT&T fiber network yesterday, and I just a household network. It's not a big deal. It takes like 20 minutes. But it's just so fast. I love it. Compared to, still remember the dial-up days.
On the fun. Now, coming up, we speak with State Street's Maria Waitman on her call to buy the dip in tech. That's next. This is Bloomberg.
She says, buy the dip. Yes, buy the dip. So, let's see here. What do we have? What do we have? Let's try Foxa dudes then. Let's see here. Boom. Let's see what they got.
The Dow up about 40 points in advance of trading, and the Nasdaq is still up over 400 points. That's a rally. Shagalani with me this morning. Do you think that the market overreacted to Microsoft's report with that big sell-off?
Initially, I think it did, Stuart. I was rather optimistic, I have to admit. Post close yesterday, when the earnings came out, the stock hit as much as 8% lower, and I was actually clapping. I was hoping, great, if it opens up this way, I'm going to buy a chunk more and add to my position. But I see the reaction from AMD, and as far as its earnings hitting it out of the park, that's encouraged investors, along with what you mentioned earlier as far as the chip makers. They've gotten a boost from the likelihood now that the U.S. is not going to impose restrictions on the likes of Japan and South Korea, Netherlands, as far as their chip making and their manufacturing of chips, which is a positive for the entire space. And that's helping the market today. That's why the NASDAQ is soaring. But Microsoft, it's not out of the woods yet. I think if it ends the day positively, if we end up in the green, then it's out of the woods. But otherwise, the tech sector has gotten hit, and they're not out of the woods yet. Investors are leaning heavily into taking profits. Too much concentration in that space. So earnings have to be stellar.
But you want the techs to come down some more to get a buying opportunity.
Yes.
Are you telling me that they've not come down far enough yet?
Not far enough yet, because I don't think this correction has run its full course. If we get some surprising to the downside reports from the likes of Meta, which I don't think we will, but if we do, that kind of surprise could shake up investors. And I think if Apple misses, certainly if Amazon misses, then we get to revisit, I think, a bit of a downtrend, and then I'll be looking for opportunities to pick up more shares of my favorite company.
That's definitely possible. Definitely possible. But I don't know if it's probable. These were some good earnings so far. Here we go.
$800 billion in market cap. You're still dealing with the notion that people think Alphabet had a soft quarter, then verified by Pinterest, which seemed to have a soft quarter. We're still dealing with the notion that these companies do not benefit from rate cuts versus a Stanley Black & Decker, where the report says basically an okay number and then goes up $9. So remember, the market still would rather prefer something that's levered to lower rates that speaks today, and they will need to compete that.
We will see what we get at 2 o'clock. Bank of Japan, of course, hiking, quarter point. Bank of England tomorrow. Let's get the CNBC real-time exchange. And the big board, it's BlackBerry, and at the NASDAQ, Armada Acquisition Corp, a blank check company, as we're back above 5,500. Bottom line, Jim, is you still are hesitant to let go of the Mag 7 trade.
Yeah, because if NVIDIA's selling it at 23 times next year's earnings, which is my calculation, and it's the greatest growth story of our era, I'm going to have to stick with it. I can't get rid of it. I have to own it, not trade it. Look, let's go back to what's going to happen later this week. Apple.
All right, let's take a look at where this sucker market is going. Look at this. You've got NVIDIA at about 8.5. You've got, Tesla started picking up. Good job, Tesla. Out of nowhere, Tesla starts running. This was barely holding on to 1% as the market was in pre-market. It was actually struggling roughly around the, frankly, it was struggling around, how should I say it, the 80-cent level there for a period of time. So pretty surprised there that it had a nice little move up. Very, very, very good move up, actually. So good job here. Then let's see what ends up happening with, we've got CrowdStrike. They're only down about 50 basis points. Okay, that's not too terrible. Then you've got a little bit of red there, more on CrowdStrike. Looks like Tesla wants to try to push, and the Q's actually trying to pull down a little bit right here, which is a little wild. Let me see here if I can get this in here. So let's see here. 1 second.
That's not just fatuous. That's real.
And what, Jim? What happens now?
Well, okay, so here's what I think is the real story with Starbucks, and it's a painful one, actually. They have the people who are already customers, in other words, the bottom of the funnel, they're spending a lot of money now. They've actually picked up in transactions. It's going well. But David, the casual Starbucks drinker who may have been affected by a mischaracterization of Starbucks and its relation to a...
Interesting. Okay, all right, so that's set. Okay, cool. So look at this. You got a red candle there on AMD. You got, and I think you're going to get plenty of buy the dip opportunities on Fed Powell coming up to yap and do his thing. Then you've got, let's see here, MasterCard. Wow, 5% on MasterCard, 4% on Kraft. Upstart out of nowhere is up to 7.6. What did Upstart do today? That's so special. Upstart. Find out what's going on here. And then, let's see, individual news. Then you've got JetBlue's negative again. Microsoft, it's bobbing around a little bit at the open there. The next stop for Microsoft, by the way, is 428. And the earnings yesterday, I thought personally were wonderful. So I wouldn't be surprised if it goes to 428. Tesla wants to keep pushing. Q's had a little bit of, I think this was a little bit of profit taking right here at the open. That's what we talked about yesterday, is that at open you might see some profit taking. And I think that's exactly what you just saw. And let's see, what else here? Then you've got, Microsoft doesn't want to trend up right now. Microsoft wants to trend down right now. Then you've got, JetBlue. Well, they're bobbing all over the place. And Meta's right on the 471 line. And then you've got, what else here? NVIDIA. Bobbing sideways here. Enphase is up about 2.5. Costco, Palantir 2.2. Ubiquity's at 1.5. Okay. All right, let's listen in here for a moment.
Guys, I did want to draw your attention to the fact that NVIDIA shares are up 7.5%. Obviously, AMD is up a like amount. The CapEx numbers from Microsoft have to certainly be viewed positively in terms of what that means for NVIDIA. Not to mention, of course, just AMD as well in a way helping. The stock was down sharply yesterday,
yes,
Jim.
It was. It's still geometric
it was
on the way
a
back.
painful day yesterday for those who were sort of still caught in that rotation on the wrong side.
Yesterday was the day of maximum despair, and then Microsoft didn't help it. That stock was down 30 when they reported. David, look, I like what Lisa Su said very much. I really like what Nadella said on the call. I keep going back to the Alphabet call, which was not good. Because the Alphabet call basically just said, listen, they have to do it. If someone doesn't do it, they may lose. And that's a terrible ROI. That's like no ROI. And that's been dissuaded on top of this, which basically...
Yeah, Mizuho did give Upstart an upgrade, but I see someone here in the comments saying betting on that rate cut. That's possible too.
Yes.
Why?
Well, because Meta is a huge customer now. Which is kind of unbelievable, because 5 years ago I never would have imagined they would be, because Jensen wasn't that crazy about their business model. But Meta's a huge customer. If you talk to Lisa Su, by the way, someone we've almost forgotten, Carl, in the discussion, which is Elon Musk. They bought 50,000 of the H100s, and now you got the Blackwells. And what they're all saying is that they're being used. The H100 is being used, but they're not sitting in a warehouse. So I think that the demand is there. I think that the really important people are Elon Musk and Mark Zuckerberg, because they're the two that present use cases that are not a traditional compute. They say good things. Well, Elon said good things about NVIDIA, but if Mark says good things after his fireside chat earlier in the week, that will really make it so you get a second day NVIDIA.
Morgan Stanley today, NVIDIA top pick. Doesn't change their number on target or earnings.
That was a good piece. Yep. Again, 23 times earnings. Now, remember, NVIDIA tends to surprise to the upside even more than the $500 million guide up that we just got from Lisa Su. But if NVIDIA surprises, it may turn out to have a high teens PE. Well, now you're starting to talk about a PE that's dramatically lower than Procter & Gamble.
Yeah, I don't know where he's getting his PE numbers from, but when I was running NVIDIA, it wasn't that crazy. Ooh, CrowdStrike's starting to rally right now. Some people, looks like, are buying the dip on CrowdStrike. I am not, but it is interesting. $2.73 is current consensus for Jan 25. I don't know how far ahead he's going. That must be the thing. He must be going further ahead. But if I take, whatever it is, $110 divided by 2.73, I'm getting 40.2. So I don't know how you can get into teens. You'd have to go a few years out.
It's more and more difficult to find out what's going on there, and you can't really talk to people who are in China about what's going on there because they don't feel free to discuss it then. I did have an opportunity at a conference outside China to meet with a lot of Chinese businessmen briefly who were and women, from the business community. And of course, it's what you'd expect. It's not black and white. It's very gray. They're,
Is fascism gray? What's gray about fascism?
Sometimes you remember they're still capitalists. A lot of the people that I was talking to,
they're capitalists.
Well, they are. Yeah, the person who runs
kulaks.
the person who runs CITIC, the person who runs CIC. Yes, they are capitalists.
They're kulaks. They're the first to go.
Meantime, China manufacturing PMI down 3 straight months, Jim. If it weren't for that, oil might be even higher on some of these Hamas-Hezbollah pits.
You're not allowed to tell the truth about China, which is that business is pretty much ground to a halt unless it's emergency services, okay? Real estate is not doing anything. The state-owned companies are not growing. People aren't drinking a cup of coffee. Honestly,
there's a lot of debt all over there, in different pockets within their economy that may not be fully recognized, particularly at the local level, taken on by municipalities that thought that they were going to be able to meet those interest payments by selling property that they have been unable to. So that continues to be a real issue for.
So do you think that
China.
It's the military that can save them? You grow
the military?
You grow the military?
I don't know. At the same time,
we've done that in our country.
The same time, Huawei, which we were supposedly putting out of business, is more dominant than it's ever been in the Chinese market.
Well, look,
so,
Apple
you may say one
story.
thing, but there's also another, which is that they do manage to continue to grow companies rather well with state support, no doubt.
Would you rather own Deckers, which is Hoka? Would you rather own On, or would you rather own Nike?
Well,
who's got
I don't like my Ons because they squeak.
When you get pebbles stuck in them, it's really bad. You got to take them off before you walk in.
So I guess I'd go with the Hoka.
Okay, that's good. That would Hoka for $300.
Yeah.
Because what's happening, Carl, that I think everybody realizes is that the consumer's tapped out there, whether it be for an expensive cup of coffee or an expensive or Jordans. Okay. So then the question is, does the consumer have enough money for an Apple phone without a phone company like a T-Mobile or Verizon that's backing them up? And that's what I want to
We're going to talk to Sievert in a minute. Subgrowth topping both AT&T and Verizon. Yeah. Props to our friends at Squawk today. Great show with the chiefs of McDonald's, Coca-Cola, our bosses at Comcast, and Delta, where Ed Bastian talked about what kind of recourse they might have after losing $500 million in 5 days. Take a listen.
I think this is a call to the industry. Everyone talks about making sure big tech is responsible. Well, guys, this cost us $500 million.
What's going to happen? You're suing.
Well, we have no choice.
Yeah.
Over a period of 5 days, between not just the lost revenue, but the tens of millions of dollars per day in compensation and hotels, and we did everything we could to take care of our customers over that time frame. We have no. So, if you're going to be having priority access to the Delta ecosystem in terms of technology, you've got to test this stuff. You can't come into a mission critical 24/7 operation and tell us we have a bug. It doesn't work.
Went on to say they had to physically reset some 40,000 servers.
Oof, it's unbelievable. It's just unbelievable. We have some of the companies that have done well were companies that had no money.
Setting up that lawsuit.
You take the update because they didn't have it. And then I think that we're going to hear from Tim Cook that maybe you need to have Apple in the enterprise because Apple didn't have this problem. So I think that's one of the things I'm looking forward to speaking to Tim Cook about. David, Apple.
Well, that is a good question. But you rarely see Apple at enterprise levels like that.
AI from other companies. That's going to be the battleground. That's the stock that's the battleground. That's the one you need to be focused on.
And we're going to obviously get results from Apple. You're going to be bringing us, I believe, as you typically do, at least some portion of a conversation with Tim Cook.
Absolutely.
And of course, Amazon also yet to come. That stock is up another 2.5% as well. So the earnings from both of those are on their way. Speaking of earnings,
Can I just tell you that
as
do
we,
you know Matthew McConaughey, the actor?
I don't know him personally, Jim.
Well,
No,
he was
do you?
sitting to the left of my wife.
Yes.
And to the right was a guy, Mike Sievert. And my wife said, boy, that guy, he's so boring, but wow, who was that guy from T-Mobile? He's dynamite.
Well, speaking of Mike Sievert, amazingly enough, Matthew McConaughey is not here.
Sorry, Matthew.
Good morning, guys.
But Sievert is. Let's give you a quick intro, Mike, because the second quarter wrap.
Pop off of that. Let's see what they got over here.
For $19.
Nothing.
No, seriously. $19.
Losers. Okay. How about
1,000 postpaid phone net customers.
Here.
Not ban fracking, but that's what she promised to do the last time she campaigned for the job, promising Americans in 2019, quote, there's no question I'm in favor of banning fracking. But when she joined the ticket as Joe Biden's VP, she adopted his position, moving to the center on the issue. Harris's campaign insists she has had a change of heart on the issue forever, saying, quote, she would not ban fracking. We caught up with some Democratic senators facing fierce re-election bids in battleground states like Ohio and Pennsylvania, where fracking is a key industry, and asked them about Harris's old campaign promises. She very clearly, when the first time she ran for president, said she wants to ban fracking. Now she's reversed it when she needs to win your state.
She's the vice president in an administration that has contributed greatly to our development of new energy sources.
Do you think that Harris is pretending to be someone that she is not?
I don't. How many people believe that?
Why is that? If she said
the lobby of Congress, it's such a joke. All right, let's go back in over here.
All industry broadband nets, including all fiber, all cable, and all fixed wireless. 75% taken by T-Mobile in Q2.
How much of that 406,000 was actually fixed wireless as opposed to fiber?
Pretty much all of it.
Okay.
And, so we're really just getting started on fiber. And last week we made that big announcement of our joint venture with KKR to acquire Metronet.
Right.
And look, we picked Metronet because they're the best. It's the industry's fastest growing pure play fiber business and arguably most important. And so we wanted to be in business with them. We have a business plan of achieving 6.5 million homes passed by 2030 with no further capital calls to support that business.
Yeah, that's a key question, capital calls, because people want to understand how you're financing this and what the impact will be on your other capital allocation decisions. So how do you explain this fiber strategy vis-a-vis especially capital allocation?
Well, we're in it because we think we can make money in it, and we think we can outperform purely disinterested financial investors because we've spent tens of billions of dollars building a brand, building a scaled national capability, collecting now with this quarter more than 100 million postpaid wireless customers that we can sell into. That's a milestone for us. And so those are advantages.
Boring. All right, let's see what we got here. So we got. Take a look. We got Upstart's now up about 5%. JetBlue down another 4%. Wow, that's crazy. AMD is up about 10%. I think next stop here probably 460. Microsoft hasn't had the love yet. Somewhat surprised by that. Tesla's getting the love. It's about 3.6%. CrowdStrike rally didn't last. Meta's trying to get back to 471. And Supermicro, wow, 7% on Supermicro. Qs are up 2%. Bitcoin rallies up about $700. You're about 9% there on NVIDIA. QCOM 4.9, Broadcom 4.5. First Solar up, Snowflake up, Amazon up. Amazon back to 185. Apple up, leading into their earnings. And Ubiquity also up a little bit. Not much over here. Almost 4% now on Tesla. And Microsoft actually keeps bleeding. I'm pretty surprised by that because I thought those numbers were pretty dang phenomenal. But yeah, Microsoft is bleeding. All right, let's listen over here.
agrees with that. But then again, not everybody thought we would be able to do 5 million subscribers in just the last 3 years. And so there's a segment for this that is here.
And the capacity won't be capacity constrained, to Jim's point, over time. I mean, everybody assumes it's going to run out of steam. Now, obviously, pure fiber is a different strategy.
And now we're augmenting it with fiber. And so now we have multiple ways to attack the marketplace and serve customers in a very complementary way. One that's based on value, and taking advantage of our embedded assets in wireless, and one that's based on super high quality with the very best assets in the space.
What if the terrific people at Verizon and AT&T, who I'm sure you completely respect and trust, decide to go to Tim Cook and say, you know what, we are really in trouble. This T-Mobile is killing us. We got to go give away the 16, the 17. Is that okay for you? Because I have to believe that when I look at these numbers, that Verizon and AT&T are not happy with how they're doing versus you.
Well, they also had quarters that were better than were expected of analysts. And so, the overall market is very, very healthy. And we're all expecting a big iPhone launch this year. I'm really excited about it. I think consumers are excited about AI. But it's hard to predict what upgrade rates will be because a lot of that AI technology is also good on your existing phone. So we'll all have to wait to see what Apple unveils. But T-Mobile's ready to compete either way.
On the home market, we talk a lot about this lock-in effect in housing where rates are high and inventory's low and people don't move. If that were to loosen, does that unlock more opportunity, or is it more about getting people to switch in their existing home?
I think it's about getting people to switch. Obviously moves are a big opportunity. They always have been in the market. And it's certainly an opportunity for fiber because now you're going to make a fiber choice. But look, fiber's just a lot faster.
Boring. Move. Moving over. Let's try over here. Commercial. Boring. Boring. It's all boring today. All boring. Please don't be back on the board. There's no good finance stuff to listen to. It's politics, and then they talk about weird stuff.
Is threatening a painful and harsh response. Where does Kamala Harris stand on this? This is her first foreign policy test. That will be biting.
Nope. Back to politics. All right. Whatever. Oh, wait. Oh, I thought he might transition. No, he's transitioning to Venezuela. All right. These people are crazy. Okay, so what's moving and shaking today? It looks like Tesla is now 4.3, so good move on Tesla. Microsoft not doing as hot, although now it seems to be bouncing off, what is this? What are we moving on here? 100-day? 200 SMA. Bounce on the 200 SMA on Microsoft. Pretty low volume on Microsoft. My guess is there's probably some, or potentially some profit taking happening here. I still aim at 428 for Microsoft, but AMD I'm looking at 160. Tesla is sitting a little bit in no man's land. It's right above its 3-year average right here. And that would take you out to about 250 would be really the next stop here. I don't know if there's enough room to really push that today. Microsoft now recovering on that 200 SMA. Upstart rotating up. Obviously, the Qs are doing well after good earnings yesterday. NVIDIA now up about 9.2%. Pretty remarkable. Then you've got QCOM up about 4.9. AVGO 7.5. SBucks 3.7. Datadog 1.9. Amazon 1.9. Snowflake 1.7. It's pretty good. Okay. Yeah, Tesla. Tesla is the one that's rolling today, or rocketing today. CrowdStrike not getting much movement here today. Not at all. And then Microsoft, yeah, still very, very slow moves off these moving averages. When and if it even tries to move off the moving averages. Surprising given how great the numbers were yesterday. I was really impressed by them. So anyway, and then I read more of them last night too. MasterCard bleeding out a little bit. 4.1, and JetBlue dropping another about 4.8 here. Tesla now capping out a little bit. Okay, cool. So what else? We've got, remember JPOW is, what's JPOW? JPOW's at 11. And we'll get to see what happens with good old JPOWy Wowie. So that'll be today. and I think that'll give traders either confidence to continue going with an earnings rally, or it'll create new fears. I don't know which, but we shall see. Looks like Meta's up 1.5. What do you got with Meta? Oh, Meta's just going right back to sort of its line over here. Yeah, and AMD's struggling a little bit. Really gotta, looks like it's getting rejected here for some reason, about 153. And MSFT now coming back. See that bounce? Maybe it's sort of your morning dip there. Your morning profit takes. Norwegian, wow, wasn't Norwegian up like 4% in the pre-market? They sort of gave up a little bit. Supermicro got rejected at 721. Bitcoin's coming down a little bit. Qs are stabilizing. Nvidia keeps trending up. You're about 113 right now. You still have nervousness this week, but what we've seen so far has been fantastic. And I have to just give it to the bulls, because and you look at it, you're like, okay, so you had better ECI data that would signal, hey, you know, there's no inflation issue with wages. You've got better ADP data that would push for cuts sooner. You've got earnings yesterday have been phenomenal. Earnings this morning have been phenomenal as well. I think the only one that really came in light was Marriott. Marriott this morning. How are they doing right now? That'd be interesting to see how they're doing in trade. Marriott. Yeah, see, they bled about 5. They were down about 4% in pre-market, down about 5% right now. So, see if you get a bounce there or not. We shall see. Okay, so then what else is happening? Let's see here. There's Norwegian, IWM. The Russell's actually down on the day the Nasdaq's up, so people are back to tech. Well, I mean, the market just reacts to data. You know, that's the way the market works. So you make a data bet, and then you see what happens. And if the data changes, you change. So Wingstop goes negative. No way! Look at that. Wingstop was up like 4% in the pre-market, and it just went negative. So again, I part of me wonders if there's just some, like, you know, pre-election profit taking on some of the pre-market bounces that happened. Not horribly uncommon. In fact, we called for that yesterday in one of the videos, that, hey, you might have some, you know, profit taking right in the AM. So we'll see how that all expands. All right, let's take a brief listen here.
We see the consistency coming from MasterCard, where Michael Meback reports some really good numbers. Healthy consumer spending, continued strong cross-border growth. Those are all good. Strong demand for their value-added services, including some cybersecurity they do. And the results are really very, very strong. And I think that's important, because when Visa came out, that was part of like the downbeat portion of the earnings season, and I think that takes that bad taste away. I was going to do DuPont. They were breaking up, and every single division was much better, but I couldn't believe DuPont's like a $35 billion company, and MasterCard's at $430 billion.
Well, to your point about some of the industrials, JCI, Borg Warner today,
yes.
Eaton, all with high single-digit percent gains.
You know, Eaton is a mega cap trend stock, but it's been hurt very badly by the new theory that data.
Okay, Microsoft's now in about a 5-minute uptrend. That's going to be one to watch, and AMD is starting to uptrend. So you could have had your morning order book of sales go through, and it looks like Microsoft and AMD are pushing. So I'm watching these, and then Tesla's also continuing to push. Bitcoin's stabilizing a bit. Let's see what happens here. Keep listening here.
To be a diplomat. People want diplomats. It's actually not a bad quarter. How's that? Underwriter Labs.
The world needs diplomats.
What? No, what do you think? These people are like, you know, look, the Phillies were a great team, but they're 25 and 22 in the last few, and they're like awful, and they stink, okay? That's the world I'm from.
What finance?
And I think that's the real breakthrough that Tonka Towers has made.
No finance. Did I mention, by the way, that today's coupon expiration day? You'll get to see exactly how I trade the Fed as I see trends, I'll send alerts. No guarantees we can make money. Some days are red, some days are green. And the goal is to make some dollar hollers. So anyway, let's listen in here to Doomberg.
Economist Claudia Sahm will speak.
Yeah, I see you, Juan.
She's expecting on why she thinks
Rotation out of the rotation trade. Yeah.
this is Bloomberg.
Fed's at 11 a.m. today. Yeah. 11 a.m. California time. Really? Another commercial? I swear, every time I go to one of these stations, it's either politics or there's nothing to comment on. Yeah, look at this. Commercial. The other one went to commercial. What do you got over here? Let me guess. Commercial. No, what are they going to talk about?
When we come back, some breaking housing data.
They're going to commercial. Okay, breaking housing data. Ooh, who cares? Yep, Meta's now trying to break through its line. All right, so let's see what else we can get from the suits here. Okay, so pending home sales come out in 3 minutes, so we'll cover those in just a sec. But what we're going to be looking for is, let's see here. Oil market has been here before, ever since the war broke out between Israel and Hamas. Oil market has been the subject of sharp swings. Yeah. Okay. Then crude volatility has recently, in fact, been trading in multi-year lows, caught by a market in general terms struggling to shake out an OPEC-induced range. Okay. This has often brought the oil market into sharper focus. Okay, that's boring. Boring. Okay, let's see how yields are doing today. Let's see. Bond yields. Oh, wow. Down 4.6 basis points on the 10-year right now. And the 2-year is at 4.33. So you're more in inversion right now after that jobs data. That's really interesting. What else do we have here? Ooh, Microsoft. Look at this uptrend on Microsoft. That's sexy. Let's go, Microsoft. My target's for this line. 428.98. That's my thinking. And then I know AMD is bouncing around over here, but this is no man's land for AMD. After those earnings yesterday, they should be a 160 stock. Easy. My take. I mean, who knows? Could be totally wrong. Tesla topping out a little bit there at 433. What's Chan's study? Donated $2 to say, open chat. Pay. No, we used to do the memberships on the main channel too. Once we grew the live channel audience to a certain amount, and it was always fun. So what else do we have here? BidX rotated down a little bit. Marriott 5. AMD's 9 and a bit. MSFT still climbing. Upstart, Generac, Kraft. Ooh, MasterCard's rolling over a little bit. How did Norwegian go negative? Wingstop goes even more negative. Oh my gosh. The Qs are rising. So the Qs are going up and Nvidia's going up, and the Russell's basically flat. It's slightly green now. Norwegian Cruise Lines, for some reason, gave up its entertainment on the day. And Tesla's almost at 5%. All right, so, okay, pending home sales. Month over month, up 4.8%, so it actually beat expectations. More stuff going pending. That is something I've noticed in person as well with HouseHack, is there are substantially fewer properties on the market. You've started seeing inventory decline over the last 30 days. Like inventory absorption is really picking up.
The best month of the year. The Dow underperforming.
I see you, Vinny.
Performed on the month. Take a look at treasuries. We're seeing yields lower as well.
Yeah.
10-year yield just below 4.1%. So a lot of high expectations for the Fed to signal a September cut this afternoon. We'll talk about that in just a moment. We're 30 minutes here into the trading session. Here are some big movers we're watching. Starting with Boeing, trying to hold on to its earlier gains. The plane maker reporting bigger losses and naming a new CEO. Those details in just a moment. Microsoft, though, under pressure. Growth in the company's main cloud computing business, Azure, narrowly missing expectations and overshadowing a top and bottom line beat. The stock, though,
I think it's funny that they keep saying that about Microsoft, but Microsoft said that was only because of a small segment in Europe. And we're actually expecting Azure to accelerate its growth. I'm also surprised they're not putting Tesla in on this, 3 and 30, because Tesla's at 5% now.
Not just to do the things that we normally do with PCs, like, gaming, as well as enterprise productivity type applications, but AI will give us yet another capability with the PC that allows us to do things locally. And a lot of people actually, although we like working in the cloud, there is some latency involved with that. And the idea that you can do things on your PC with your personal data, I think is a positive.
All right, bullish on AI PCs. The semi-ETF, by the way, the SMH, on pace for its best day since last February, in fact, but still on pace for the worst month, September 2023.
Meantime, pending home sales data just came out a couple of moments ago, up 4.8. In June, we were looking for 1%. That is going to make it the best print of the year so far. Prior was down 2 and change, so a little bit of a loosening in the pending home market.
Well, lower rates, lower mortgage rates, good for some housing
Although
activity.
mortgage apps weren't on fire today.
Yeah, no, I mean, we're still in these kind of high levels, although, because it's the Fed day, we always look back at where rates that affect you were before the Fed started raising interest rates during this cycle a few years ago and where they are now. And, they're significantly higher. So we put together the 30-year mortgage rate, the home equity rate, which is also significantly higher at almost 6%. Credit card. I mean, this is how ordinary people feel what the Fed has done between March of 2022 and now. And those rates in March 2022, they were even lower before. That was a run up in anticipation of the Fed raising interest rates. So that's the backdrop for today.
Not to mention the 10 years below 4.1.
Right. So that could offer some relief. I mean, we're at the lowest levels now since March, as the market prices in about 100% certainty that going to cut rates in September. The question today is how they signal that, right? How Fed Chair Powell in his news conference, or how the committee in their statement signal that they have made more progress on inflation, because they have, but don't go all out telegraphing and tying themselves necessarily to a September cut, because there are 2 more inflation reads in July and August before we get to September. So take a look at Treasuries. Yields are lower. Also, it's worth noting we got some data today, ADP, private sector jobs. That was a bond-friendly report because the headline was lower than expected. 122,000 private sector jobs added, less than expected. Not the best correlation to the government report, which we're going to get on Friday. Here's the breakdown. Well, this is actually the pay breakdown, but one thing I wanted to point out on pay overall is that the median change was 4.8% for job stayers, and that was the lowest it's been. And then for job switchers, who always get paid higher, 7.2% is also a lower number. And so, again, Fed-friendly. Put that with the employment cost index report that came out today as well. That was a little lower than expected, and also a reversal of what we saw in the early quarter. And there's more progress on the inflation front, which is exactly what the Fed wants to see and the market wants to hear from Fed Chair Powell today.
You're not expecting any surprises then, as you say, just the language, how he signals.
It's how he signals and how the committee signals. I think the surprise would be if the market isn't convinced that he's committed to a September cut. That could be a hawkish surprise, a dovish surprise.
Yeah, I'm a little worried that that's exactly what's going to happen.
Easing cycle. And if you listen to some of the corporate commentary, just in the last 24 hours from the consumer, which I'm sure the members of the Fed do, hasn't been all that hot. Listen.
Yeah.
You're seeing that the consumer is eating at home more often. You're seeing more deal seeking from the consumer. And you're just seeing, I think, a trade down even within either units per transaction or within mix. All of those things for us are indicators that the consumer across a number of these markets is being very discriminating. And I would point out consumer sentiment in most of our major markets remains low.
As we enter fiscal 25, we continue to expect the environment around us to remain volatile and challenging, from input costs to currencies to consumer, competitors, retailers, and geopolitical dynamics.
I think we are operating in a challenging consumer environment.
Particularly lower income consumers
they have moved to a basket size that they can afford. And if the biscuit brand that they like can fit in there at the right price point, they will buy it. If not, they will not buy any biscuit. So these days, we have to be much more aware at which price point we offer a pack.
It remains a difficult consumer environment.
So that was the week, according to consumer CEOs, everything from McDonald's to Starbucks to the packaged food companies. I mean, clearly there's pressure, and that weakness is something for the Fed to pay attention to. You know, part of their mandate is employment and growth, and the other part is inflation. And so one key phrase, you know, you asked about the surprise factor, David, in the committee language to watch. So they had previously said inflation has eased over the past year but remains elevated. Do they take out the remains elevated, or do they signal in some other way? Just something we're going to be watching. European inflation didn't go in the right direction today. It was a little hotter than expected. So,
and you didn't want to talk about the yen, about the Japanese central bank?
I was waiting for the prompt.
There it is. I gave it to you.
So Bank of Japan managed to surprise today, and the market was impressed with it, even though there was expectations that they would hike interest rates, and they did. What happened? Well, they cut their quantitative easing program as well. And so the yen rallied. And that's been a story of the last few weeks as the unwind of the carry trade. But the rallying yen is certainly a factor here. And they did manage to.
Here, I'm going to pull off that for a moment. Okay, some things that I'm noticing. So I'm noticing the Qs are rising. Tesla's rolling over right now. So look at this. AMD, I think, hit its bottom of the morning. So somewhere around this range right here. I don't know. It could just massively leg down again. Microsoft also still continuing its uptrend here. Then you've got the Qs. The Qs aren't giving up on their uptrend. Wingstop goes negative. Tesla did give up about 0.5% there, but that doesn't necessarily mean anything. Still 0.5% on CrowdStrike. Meta, look at that. As soon as Meta broke through that line, they just kept going. So good job on Meta platforms here. I don't know, who calls them Meta platforms? I just see that's what, I guess they're called Meta Platforms, Inc. It's just a weird name. But I preferred Facebook. So at least that was recognizable. But anyway, so Meta doing very well here. AMD coming off its AM lows, and Microsoft's trend up here seems to be continuing. Tesla looks like it's a little exhausted on running so much. And NVIDIA just keeps going. I mean, you're at 11% on NVIDIA. So QCOM, Broadcom, Amazon, all these suckers just moving big after those Microsoft earnings yesterday. And a little bit of red on Microsoft there. All right, so what else? I think let's flip on over for a moment. Let's see. They talk about naming a new CEO. That's boring. Let's see if they got anything over here. Oh, look, they're talking about Microsoft. Let's hear it.
Okay, well, today we've got Meta after the closing bell. Tomorrow.
See, they all say disappointing cloud growth. It's such, it's so misleading. Because when you listen to the earnings call, they said the non-AI portion of Europe was a little slower than expected, but we're seeing accelerating Azure growth. I don't know. It's wild.
They cannot grow into these valuations, so they will correct. It's just a matter of timing.
No matter what, they all
will. No matter
will.
what, no question about it.
Should I sell my Microsoft?
Stuart, your tax basis is so low that I can't even imagine what your tax bill if you would sell. So if I were you, I would just write it out.
But it's in my retirement account.
Oh, well,
where
then,
I pay no capital gains.
I'd be trimming quite heavily.
Would you? Would you really?
Of course. Yes.
Ooh, okay.
This guy comes out, sell Microsoft. A lot of things are actually rotating down right now. The Q's just got a red candle. AMD, Microsoft, Tesla. All right, let's keep listening here.
Before the end of the year. It's a very small chance that they do 50 basis points in September. More likely they do a quarter September, quarter December. But the market has fully priced that in. It's known about it. And so this is where I've talked on the show about 20 times this year that the Fed is a very overrated actor in markets. That the market was expecting 6 rate cuts at the beginning of the year, starting in March. It didn't get them. The market's still up 15%. The markets have been shrugging off all the Fed talk all year long.
Okay, stay with me, David, please. Stay for the hour. All right, Lauren, come back in, please. I want to look at some of the big movers today and start, please, with Humana. That's a big move. It's down 6%.
It's an insurer, and their costs were elevated in the quarter. They're a major Medicare provider. Those 65 and up, right? Humana says that demand for medical care, including hospital admissions, rose above its expectations in the quarter and continued into this month.
DuPont, an industrial company.
Yep, they raised their full-year profit forecast. Stock's up almost 5%. This is a high. They're seeing stronger demand for electronics in particular. Why? Stoked by AI updates that are in the electronics.
How about the Match Group? I know it's the parent of Tinder,
and
right?
OkCupid, etc.
Why is it up 11%?
6-month high. They announced plans to cut jobs. 6% of staff because their paying users have fallen by 8% in the quarter.
And the stock's up 11%.
Yeah, save money.
That's Wall Street. Thank you, Lauren. Coming up, a Morning Joe panelist made a wild claim about J.D. Vance's childless cat lady comments.
Why are they still talking about that? I don't think it's ridiculous. Okay, so what? He called AOC a childless cat lady. Big deal. Get over it.
But what folks don't like is color from the earnings call. The management talking about the idea that hospital admissions could be higher and that patients may be staying longer in hospitals. That, of course, will mean that they will have a greater cost. And then finally, rounding out the picture, Starbucks, it's less bad than feared. The stock is up 3.5%. Katie, as you know, they basically put up an inline quarter. But the fact that into this quarterly report, the stock down 20% year to date, lots of concerns about growth in various geography and too many stores. Well, the fact that they just made the numbers has the stock up about 3.5%.
Yeah, a little bit of a relief rally underway in Starbucks. Abigail Doolittle, thank you so much. Now, coming up, Donald Trump's lead in swing states has evaporated since Kamala.
I don't know. I have a hard time investing in Starbucks. Too exposed to China. You know, over 30 cents of every dollar you're putting in that stock is betting on the Chinese consumer, and there's so much cheap coffee in China. It's not a bet I want to make. That's a scary bet. So no, thank you. Okay, so remember the next stop now is we're going to head over to the Course Member Live. Remember, you always get lifetime access if you join those courses on Building Your Wealth, meetkevin.com. You pay once, you get lifetime access. You join the stocks one, you get trade alerts as well. No guarantees we can make money, but always making bets. And that way you can see trends that I'm seeing. The interesting thing today is going to be once we get from here to Fed Powell at 11, I don't expect to cut, but we're going to see, is Jay Powell going to tee up the cut for September or not? I don't think he will. I think they'll want to be data dependent, but I will say yesterday's weaker jolts in the underlying, like if you sort of look at the non-government jobs, the underlying was weaker, the headline was stronger. Jay Powell could look at that either way, so he has some optionality there. Usually he goes based off the headline. He doesn't usually dissect the jolts. He could look at the ADP report this morning, but I rarely see him care about the private reports. He usually cares about the public reports. So I'm probably a little bit more leaning towards Jay Powell maybe coming across as a little hawkish today. But who knows? You know, maybe I'm wrong about that. And then obviously the second part of the day, we'll get some more earnings again. We are going to get Facebook, ARM, Qualcomm, Carvana, Lam Research, Western Digital, Etsy. So, of course, we'll be covering those live. Those will be really entertaining. And, yeah, I'm excited to see where the day goes. So make sure to subscribe here to the Market Live channel, and we'll keep on keeping on. So I'm going to go make some more coffee. We'll jump on over to the Course Member live stream afterwards. But for now, let's push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HealthSac, nor am I presently acting as a market maker. There you have it. Thank you so very much for being here, folks. We will see you in the next live stream, which will be again at 11 a.m. California time for the Federal Reserve's press conference. See you there, folks. Bye.